Hello, hello, good morning, good afternoon. All right, let me make sure. Hey, Sam. Hey, Tension. All right, let's make sure I'm sharing the document. Okay. Hey, Judy. Hey, RC. How are you guys? All right. I guess we are all set. Oh, just give me a moment. Okay. Okay, I think I'm set from my side. Just confirm that the audio is good at your end. Don't want to be talking for 10 minutes and then realize, oh, Vivek, we can't hear you. Is the audio good? Cool. Great. All right, guys. So let's get started for today's session. What else we have? We got 10 people in. Yeah, I guess folks will come in when they'll come in. So what's on your mind? A few things that I have on my mind is to, of course, just look at what's happened in the market generally. And also, we saw a lot of 13F filings come through. So that is basically a filing done by, it's a statutory requirement that if uh, your stake in a company exceeds certain percentage, you have to file it with SEC. It goes in a different types of filing. 13F is the most common one. So which gives us some idea into what those big money managers are buying or selling. So we had a lot of 13F filings that have now come in. So I went through almost 80 of them, and I'll present you. There's some interesting stats that you can gather. These filings are as of end of September. So it's not what they bought or sold, yesterday. It's as of end of September. But interesting one. So yeah, that's one big topic that I have on agenda. We'll look at some stocks. We look at crypto. Crypto has been on fire lately because of the election results. So we'll look at that. What else you guys have in mind? Let's see anything else on the chat side. Does that sound good? Anything else? Anything else you want to talk about or you want to cover? NVIDIA earnings. So will NVIDIA earnings is I think on 20th. It's on, let me look at my board. Yeah, it's on Wednesday. So it's going to be I guess, very uh, uneasy week until the NVIDIA earnings goes through. Then we'll know what's happening in the whole AI sector. So we might look at NVIDIA as a company. So that's cool. I look at NVIDIA as a company, just show you in terms of what they have done in the past and what is market expecting for them to deliver in the upcoming quarter. So yeah, there is a list of companies that I'm watching earnings for this week. So I'll share that what earnings I'm watching. Any new learnings this week from anyone? SMCI? Yeah, I have not. I don't think I want to touch SMCI for the reason that I've talked since I think February or January, when the SMCI had been SMCI stock has been on fire, and I was like, I don't know why the stock keep going up, because the business is not that great anyway. So, but I will talk about SMCI because something happened in after the market close on Friday. So we will talk about what's going on with SMCI. Looks like they found an auditor finally. Melly and Qualcomm. So Melly, I already reviewed, Judy. Melly, I reviewed it last, was it last? Yeah, last week I reviewed a Melly earnings. We did talk about it. I mean, the stock was punished after earnings, but I didn't find anything which was of concern to me. Though I think the reason why the stock got punished was because the margins were under pressure. But if you get into the details, look, go through the whole earnings transcript or listen into the earnings call, the reasons why the margin was under pressure because they are investing in building their credit portfolio and hence have to account for a higher provision for bad debts and building up the logistics network in Brazil. So they want to double their warehouse in Brazil. So they opened 5 warehouses this year. Idea is to open 11. So of course that means initial expense, but I think so. I'm still bullish on it. These are the investments that we need for a long-term play. It's just like the same story that we have seen in Amazon. So I don't know why market looks at the short term and sell off the stock. So I did buy the stock at, I think I bought at 1770 and it recovered a bit, but I'm not worried about merely in currently. Unless you have any specific question on Melee. But you can go and maybe look at a previous week's recording. Qualcomm. I don't own Qualcomms. I haven't. Let me take a note of Qualcomm. I never looked at Qualcomm as a business. I know they were planning to purchase Intel, then they're trying to move into PC side. So there's a lot of stuff happening on the Qualcomm. But I just took a note. Maybe we'll look into Qualcomm, see what's their earnings, etc. are. What to do with Tesla? I wish I had an answer for it. I think Tesla is going to be volatile. If you're in a Tesla, be okay with the volatility, that comes along with the Tesla. Tesla will, I mean, that's just how the Tesla is, right? So it's we have a key man risk in Tesla, which is Elon Musk. And of course, Tesla ran up to, it was up for 30% after the election results. So yeah, kind of gave up a little bit, right? The only reason why it was up like 30% after elections was, hey, it's an Elon Musk. He's got a president's ears now. And if that's a reason for investing in a stock, I don't think that, I mean, it could be a reason, but long-term really doesn't matter. So I am still holding Tesla and trade around my position. So, but yeah, you do what you do. The 7,500 EV credit that now I think the administration is talking that they're gonna not continue with that EV credit, that will hurt other companies more, which in turn means it might benefit Tesla. But this is all up in the air, right? The things haven't, I mean, it hasn't been removed yet. So we'll see. But Tesla is anyway a volatile stock. So if you're doing options, you can get some good premium on Tesla. But you have to be comfortable with the antics of Elon Musk if you're in Tesla. MicroStrategy, yeah, okay, let's talk about MicroStrategy when we talk about the crypto stuff. Palantir, I have on my list, Palantir. Copart, CPRT is Copart. I do have on my list as in terms of to look at the earnings, but that's one stock that I've heard multiple times it's very popular among value investors because it's got such a big moat around it. So I do want to, I have not owned it, but it's like on back of my mind for many months, but I have not initiated any position in it. Zaina says, I've been learning about covered calls. Do you ever utilize them? Yeah, all the time, all the time. But you have to be careful in not careful. You have to be okay with and not with if your share gets called away. So pick up your strike accordingly. Number two is in an incessant bull run, you might as well better holding your stock and not doing covered call. So I rather prefer doing a call spreads rather than doing just a call, so that if a stock goes crazy, we will look at some of the stocks that have gone crazy, and in that case, the call spreads would have helped. Uh, let me see. So I did cover the various flavors of covered call on my this year's boot camp. So you can go and watch the boot camp video. It's on my website. You don't need to pay up anything for it. But I did talk about covered calls, how to utilize them, how to pick deltas, what are the various flavors in the covered call, in how you if you are on very these momentum stocks, then what could you do with those covered, how to play on momentum stocks by selling calls, right, and not get out of your stock. So that's where the call spreads come into picture. So yeah, if you have a particular question, ask me, but otherwise you can look at that video. Amazon launched Hall. Yes, I read about it. Amazon also launched delivering these GLP-1 medicines, etc. So some of the companies like Hims got impacted by Amazon's that announcement. But we'll have to see in terms of Hall, how much is the Hall gonna matter. So yet to be seen, yet to be seen. But I think the Temu and Shine, there was a news that Congress might even, that close the loophole which these companies have been utilizing, where you have a de minimis import and you don't have to pay import duty. If that happens, then Temu and Shine and basically the respective companies will be in trouble. Vishal says Copart is getting into European market and exploring India. Oh, cool. I mean, I'm not followed Copart. Like I said, it's on the back of my mind. Speaking of crazy APP, I guess that's app loving, right? It's yeah, that stock was in the news. Yeah, look at the crazy jump on this. That was, I think, in the news after earnings. What it was up like 46%, almost 50% after earnings. RC says, what's the URL for my website? So let me share the website. So optiongig.com, and I think the bootcamp. Where is my bootcamp? I think moved it here. So yeah, you can. So covered calls, call options and monthly income strategy. This is where I've covered a different flavors. So it will be almost 2 hour long video. So have some patience. What are some companies that you think will have a strong growth short term? I don't even look at short term. So I don't know. I try to look at the companies and see if I can buy them for forever. Means that the company should. Of course, there are some companies that I'll hold in terms of if I'm trying to take some lottery tickets, but that will be very small portion of my portfolio. In terms of the companies, I guess I only can talk about the companies that I hold in my portfolio, and I think all of them still have, majority of them probably still have a good growth prospect. From a business side, I can't say anything about the stock side. I don't know what the stock gonna do. So I'm still bullish about Mercado Libre. I'm still bullish about I mean, pick any of them. What else should I talk about? Palantir still continues to do business. I can't say anything about their stock size. I think it is too overpriced. But what do we know? Market continues to pay higher value for Palantir, but the business is doing great. It's growing 30% revenue year over year. That's decent enough. ADP, $18 billion revenue. CEO is Maria Black. Thank you. So you remembered the prerequisite of, hey, if you want to ask for a stock, what you should. So I'll take a note. So we'll cover ADP, run through our checklist of high quality company. So I took a note of it. We'll do that ADP next week. Aditya. Cool. Any other stock request? But you know the drill, those who have been attending this, you have to give me what's the market cap of the company. So Aditya, not revenue, I need the market cap, but at least you did some homework. And who's the CEO of the company? Those are the two prerequisites. Cool. All right, let's start into today's session then. Thank you everyone for joining in our discussion number 256. We're almost at the, feels like almost at the end of the year. I think this year has gone past very, very quickly, at least for me. Or maybe it looks like every year seems to be seems to be like that. You blink your eye, you have a happy new year, and then now we are already past Halloween, right? And but we'll see. A pretty good year so far, and keeping my fingers crossed. We got 6 more weeks to go in this year, and hopefully everything when it comes to the investing, stock probably will still be good. So yeah, been enjoying doing these sessions, and I hope you are able to get something out of these weekly sessions. So thank you for joining in. Like I said earlier, today I want to cover some of my insights that I was able to glean by looking at 13F filings. And we'll look at general, some of the stocks, little bit on the crypto side, some stocks related to crypto. Yeah, that's on agenda. I'll give you some, what are some of the stocks that I bought and sold and what's the reason. Not a recommendation, but I have just being transparent about my activities on the stocks per week. Cool. With that, let's get started. As always, everything that we discuss here is only for education. Don't take it as a financial, tax, or investment advice. Do your own homework. With that disclaimer out, let's look at the market first. So the weekly performance, if you look at the markets, right, wasn't really good. I think the last 2 days was the last. I know definitely Friday was a down day. I don't know. Thursday was a down day or not. Does anyone remember? But overall, I guess the weekly side, the market closed down lower. So let's look at SPY, right? We're kind of back to where we were on 6th, right? So this is where the election results came in. So we had a huge run up after the election results because the uncertainty no longer exists. Now we know who's going to be the president, and it's not probably not a contested election. So market doesn't like uncertainty. So once we had the results out, market ripped higher. Now giving back some of those gains. And if you are feeling a little jittery about it, let's look at it's still up 24-25% for the year. So so nothing to complain about it, but I guess these pullbacks are healthy. We cannot have market going in just without any pullbacks. We can't have just market keep going up, right? Trees don't go to sky, and trees can never grow to sky without any pullbacks anyway. So a little bit of a healthy pullback, I'm okay with that. I think it at the high touched just had over 600. So tension says SPY is scared of 600. Looks like this week because it barely touched 600 and then it came back. But if you listen to some of the voice in the Wall Street, I think they're giving some of the targets that I heard was like 610. It could actually do 610 by end of a year. Again, I don't know. And neither those Wall Street folks would know. but everyone will give their guesses. So I've heard targets of 610 by end of this year. And even if you go back and look at the history, November, December, after election year has generally been positive for the markets, right? So considering that we finished October where almost here and still positive for the market, right? So as long as stays above October, I think we have a pretty good 2024. Nothing to complain about. And that too, after a pretty good 2023, you don't get these very often, right? 20% plus return on S&P 2 consecutive years. I think it has happened, what, 5 times in 75 years, something like that. We'll look at that stat earlier. But pretty good. So while the weekly chart might look red, I see more red color, especially the big cap. Nvidia was down like almost 4%, Microsoft down 1.78%. Broadcom, what happened to Broadcom? Broadcom is down like 10%. So all the chip sectors, and I think that came up after the AM Applied Materials earnings. And the whole chip sector was down. Semiconductor, I don't see anything green out here. Micron down 13% for the week. Intel down 7%. Texas Instruments 9%. AMD almost 9%. Even the consumer, yeah, okay. Amazon is in the consumer cyclical. So communication services, tech, Google down 3, Meta 5. All the big market cap companies are down. Eli Lilly is down now 11%. So the things that worked out last week is financials, right? That's the only sector where I could see more green than red. And Berkshire Hathaway was up 2%. I think Berkshire Hathaway is now hit, it's a $1 trillion company. It's the first non-tech $1 trillion company. Let me just make sure I get my stats right. Yes, $1.01 trillion. And this is on top of holding what $375 billion in cash. Warren Buffett is sitting on gargantuan amount of cash. Without doing anything, he can get like $15 billion per year. But yeah, so Berkshire Hathaway is the first non-tech $1 trillion company. James in consecutive 20% plus year after year is extremely rare. Yeah, that's what I was saying, right? It's happened maybe once, sorry, 5 times. There's some chart we looked at a few weeks ago where we looked at consecutive 20% plus, and then I think 3 years consecutive positive markets after having 20% plus. That's even rarer. I think that has happened maybe once. That doesn't mean that it may not happen. So these are all historical data, and of course the market dynamics have changed. We never had a Fed inject so much of a liquidity, before 2008. Now things have changed. Players have changed. So don't just sell off your stock just thinking that, hey, we already had a 20-year plus return years. How much more can it go next year? We never know. We never know. But that also doesn't mean you go all in thinking, you know what? Hey, there is no Fed's got our back. Fed put his back in the market, and now we have a Republicans, and probably they control. I don't know if the House result is still out or not, but expectation is gonna be a clean sweep. We're gonna get a corporate tax rate cut. And deregulation will be in place, so the markets will rip higher. Maybe, may not be, who knows? Attention is it's because of Nvidia. Last year, bull market, let's go, baby, let's go. Yeah, it'll be great if we go. It'll be okay if we don't. I'm fine with either of these ways. anything can happen in next 1, 2, 3 years, and you have to be okay with if the market doesn't perform next year. I mean, on an average, it's supposed, isn't the market on an average goes down 10% in once in 3 years, right? So we had in 2022, or maybe. So we'll see. I hope we get 2025, whatever, 20%, 30%, that'll be great. But I'm not betting my farm on that one. Alrighty, so let's look at the sector wise. Right, all major indices were down. SPY is down, QQQ. So this is our tech 3.5%. So this is like almost your close to your T-bill performance. It in a 1 week it'll be up 4%. Next week it's down almost 3.5%. So tech was really weak. What else? This is the tech sector. We looked at financials are all green. Energy was okay. Healthcare, a little bit of a political impact on healthcare after Donald Trump announced, his nominee for what's the department? HHS, healthcare services, human healthcare services, right? With RFK Jr. And he is considered to be anti-vax, pharma company. So I think the whole healthcare biotech sector sold off. And now these are the ETFs, right? You don't see these big moves in an ETF. The reason why we want to invest in ETF is, hey, you don't have a company specific risk. So yeah, it may not give you, exponential results, but you also won't go down quickly. But look at XBI, biotech is down 11%. XLV, which is healthcare ETF, is down 5.5%. So healthcare wasn't good. And again, this is more driven by the political changes, nominees, than anything else. What else? So the inverse did really good. Of course, when the indices are going down, the inverse funds will perform better. Large cap growth, nothing much. Value also. So both value as well as growth, both for a week didn't work out. One thing that really worked out this week was like Bitcoin or the crypto related ETFs. FBTC, these are all Bitcoin ETFs. I bet FBTC, GBTC, BITO, ARKB, all are up close to 20%, like 19 point some percent. Again, crypto friendly White House, we might have some regulations that'll be friendlier for overall the crypto economy. And as Cynthia Lemons have a bill called Bitcoin Act, and that Bitcoin is not the Bitcoin crypto, but of course, lawmakers will come up with fancy names. I even forgot what the overall name for. And because of that, we're seeing crypto on just like ripping like crazy. And all the crypto stocks, we'll look at a few. Samsung's Bay Area tech company AppLovin announces layoff. Cool. After the stock went up, 50%? They announced layoffs. All knee-jerk reactions, everything has to go through Congress. Yeah, so there are some, of course, all these appointments have to be confirmed by Congress. And number two is there are some decisions that can be executed through presidential, president's executive decisions. Other decisions have to go through Congress, so we'll know what happened. But yeah, market might have run up, ahead of itself. Happens many times. So we'll see. We'll see what. Year to date, sector wise, all sectors green. S&P close to 24, 25. IT, tech sector from a stock perspective, tech and communications continues to perform up 30%. So if you are heavy on the tech side, congratulations. But we still have $7 trillion sitting in the money market. It's the first time, I think Bloomberg had reported, first time money market fund assets have reached $7 trillion. So a lot of money is still sitting out. Right? It is defying the Wall Street skeptics. And this is, I don't think I've seen this happen enough, that Fed is cutting the interest rates and the 10-year refuses to bow down. 10 years still high. You can still make 4% with almost no risk on 10 years. Let's see what's a recent auctions say about the government bills. Auctions. Where's the recent auctions? Come on. So 4-week is yielding you 4.6%. For 6 months, you can get a yield of 4.5, almost close to 4.5%. And these were the recent auctions. Let me see if there are, let's look at the 52-week, which is a year, 4.3%, right? 4.29% without any, I mean, yeah, US government has never defaulted on its debt. So it is as risk-free as you can get. And you can make 4.29% for a year. So there is no reason that any money should be in your checking account, except that what you need for the next few months for your day-to-day expenses. I mean, you can make checking account doesn't give you anything, right? So what, 0.02% is your high yield checking accounts? Might as well maybe put in like 4 weeks, 4-week, 8-week, everything is currently yielding more than 4%. Right? Look at notes, 10-year is 4.25 high yield. Yeah, so what, close to 4.25, 4.3%. Can you please explain 10-year? Can you sell it at any time? So this is when I think you need to understand the risk also. Even it is called risk-free if you hold it till eternity. I mean, till maturity, not eternity, till maturity. Even the smartest bankers learned it the really hard way. I don't know why, because it's so if you buy this 10-year, let's say 10-year treasury from a secondary market on your brokerage account, the risk that you need to be aware of, which is called interest rate risk, is in case, I mean, you can sell it at any time because these are traded in secondary market. Don't buy it on a treasury direct. If you buy it from a brokerage platform, or maybe you can buy on an ETF. You can find an ETF which is like 7 to 10 years maturity. If you buy them, if you hold it, you will get whatever this 4.x%. But if you want to sell it, then you actually may end up losing money if the interest rates goes higher. If interest rates goes low, then the treasuries that you hold will increase in value. If interest rates goes higher, then it will go down in value. Right? So this is what happened when we had all these bank failures last year, is because all those banks have held long-term maturity treasury notes, right? 10 years, 30 years. And when Fed start to increase the interest rates, the value of all those bonds went down, and hence banks were like, suddenly their balance sheet was upside down. And then talk about any like SVB, happened with SVB, happened with this another California bank, FRB, First Citizens, First Republic Bank, and all that stuff, right? So if you hold in maturity, you will get your designated percent, whatever the committed percent return, but in between, anything could happen depending on how the interest rate is. So buy it if you can hold it till maturity. Right? Now, my thinking is that Fed, and again, it depends on what happened to the inflation and all that, but we're not getting hints that the Fed is going to increase the interest rates, right? So if Fed reduces the interest rates, the value of these bonds which you hold or the notes that you hold will go higher. So that's how you need to understand this interest rate risk if you are holding a long-term maturity notes. Longer the term of the maturity, higher will be the impact of change in interest rates. Some of the highly paid bankers learned it very hard way in 2023. Their banks went under. Sam says LL Floorings Holdings guy entered for 30 years later in 2016 suggested this stock. And again, looks like this only trades on OTC. Looking at the ticker, to me looks like trades on OTC, so it doesn't trade on exchanges. What is the difference between high yield and interest rates on T notes table? So I think was it on the bill side or was it investment rate? High note rate. And don't quote me, but I think this goes through the auction. And then if you are doing it on the treasury note, as an individual investor, I will put in, let's say, non-competitive bid. But there are competitive bids that come from institutional investors. And I think maybe this high yield could be what's the highest bid that came in. And this is where you finally ended up settling it, something like that. But yeah, so it's, and as an individual investor, I don't know which one do you get. I kind of forgot. RC says SPACs and Fidelity offers the same return. Yeah, because they generally invest in money market funds. So SPAXX, I think FCFXX, there are a few money market funds on Fidelity, or you can pick up from any other brokerage firm. They have their money market funds. And what money market funds do, they'll invest generally 3 to 6 months of T-bills, which will be like, whatever, 3 months means 17 weeks, etc. They get 4%. They'll keep some with them and pass on the rest to you. So yeah, even money market funds, I mean, that's what they do. Now, the only difference between investing directly in a T-bill and the money market fund would be, and it matters if you are like planning to invest 50,000, 100,000, if you already plan to invest $1,000, really doesn't matter. The tax, any interest income that you make on your money market fund is subject to your capital gains tax, right? Short term, long term, whatever. When you do it on a treasuries, right, you don't pay any state and local, if I recall correctly. You only pay the federal ones. So, or was it the other way around? But it's more tax favored. I think you don't pay state and local taxes, the interest on the treasury bills. So it is more tax efficient than investing, or you can, even if you put it on a CD, you can get a CD for 6 months, close to 4%, or maybe for a year. But then from a tax perspective, this is more efficient. But then you're locked up on those funds, can't use them for collateral or trading. That's true. Now depend on, how active you're on trader you are. So there are always pros and cons of these things, right? And if you're someone whose money is sitting in checking account and you don't trade actively anyway, you can get, and if you buy the T-bills, you get favorable tax treatment. But if you are the one who wants to get little more buying power on your trading account, then you may want to hold and buy these and hold it on your brokerage account, right? In that case, you may not bother about saving some on that state tax. And if you're on whatever, the taxes where you don't have to pay any state tax, then it really doesn't matter. So yeah, you have to look into the other pros and cons, right? All right, so $7 trillion is still sitting in this money market front, and slower than predicted rate cuts may fuel further inflows. But in 2024, we were expecting 7 rate cuts. How much did we get? 2. So far, only 2. Maybe we'll get 3, right? And so I don't put much faith on what the Wall Street says in terms of the number of cuts that we may get next year. Some year they'll come okay, some year they'll be way off, like they were way off this year. But looks like maybe Fed will go slower than we were expecting. So you might still get this 4.5% longer. And that means the money might sit in the money market fund for longer time. So and if I think the whole market, including the Wall Street and the rest of us, are waiting for when this flood of money will move from the money market fund into the stock market, right? We've been waiting for almost 2 years, right? 2023, we were thinking Fed is gonna cut some, reduce some rates. Didn't happen. That $4 trillion, $5 trillion sitting in the money market fund. 2023 market was up 25% plus. Still, the amount in the money market fund was like 5-6 trillion. This year we are up almost 25%. And I think the Peter Lynch has said more money has been lost in waiting for the crash than in the crash. So those holders of 6 trillion, if they were holding this 6 trillion, assuming that the market will crash and I'll buy when the market crash, imagine the upside that has been lost in last 2 years. If you're holding, and I imagine, if they're holding in the $6 trillion money market fund, because that's how they have structured their portfolio, that, hey, I've already invested enough in the stock market. This is my cash pile, which I want to hold 10%, 15%, and that's sitting in the treasury bills or money market fund. I think that's okay. But I don't think that's the case. I don't think that there's a $6 trillion is like part of the cash part of a portfolio. I think it's still waiting to be deployed, waiting for the market to crash. So 3-month T-bills, 4.52. We looked at, so enough. If you are risk averse and don't want to go through the gyrations of the stock market, maybe look at some of these things before Fed, starts to reduce the interest rate at a higher pace, and then these T-bills rates will come down. So we want to lock in now. James says 4% is here to stay for a while. Inflation will be going higher with the lower corporate tax rates and tariffs. Yeah, so this is what we are scared of, right? Things that happened in 1970s with Arthur Burns was the Fed chairman, in which we cut down the interest, Fed reduced the rates, and the inflation rate higher, and that was like such a black eye on Fed. And I think that last year, that's what we were in every FOMC meeting when Jerome Powell was saying, we want to go slow. We don't want to cut it prematurely because they don't want to do another Arthur Burns. Okay. But if inflation continues to go higher, and I think those PCE will come in soon, but if it continues to go higher, that'll be not good for market. Then I don't the worst thing that market could see is Fed actually increasing the interest rates, right? And so much has been priced into reducing of interest rate. If the Fed takes the other way around, which we don't know, that's not going to be good. But with the lower corp tax rates and tariffs, if tariffs comes in, we should, again, I don't know if the tariffs, so far it's all been election talks. at the end of in the end, Donald Trump, he has only one scorecard with which he measures his performance, which is, I think, a stock market. He's been talking about tariffs and all that stuff. What could also happen is he'll have a meeting with Xi and say, you know what, we're gonna impose some tax on this particular company. You invest something so much on the US side, and they'll come to an agreement. Who knows what could happen, right? And both the countries get some concession, and then no tariffs will have it. So I am not changing my investing thesis based on, oh, we're gonna get the tariffs. I don't know. Maybe we may get it, we may not get it. That's election promises, and the actual implementations could differ. But if we do get tariffs, then yes, I expect the inflation to kick in higher, because at the in the end, it is the consumers who will pay. Right? It's the consumers who will pay. If you continue to import, there will be more import tariffs on that one, which will be passed on to consumers. And then the domestic producers will also increase their prices, because now the competition is not there at that price, right? So they don't have a fear that if they increase the prices, the consumer will shift to the competition, because that competition is no longer there. So tariffs have never been good for consumers. Or if you stop importing and start producing in US, then the cost of labor is high, the cost of production is high. So anyway, those goods will be produced at a higher cost, and corporates are not going to eat up that cost. They're going to pass it on to us. So tariffs are never good. All right, looking at a fear and greed index, we are back to neutral. Look how quickly this barometer switches based on week to week basis. And the market's down, and now we're back to neutral. Right? Who cares? I don't care about a week to week basis, but it's good to see when to be little cautious. So when it's in a greed or extreme greed, it's time to be cautious, right? Let the others play out in the market. We can watch it from the sidelines. We'll come in when there's a blood in the market, so that we can get some discounts that we're looking for. That's the only reason why I look at and talk about it week to week basis is, do I want to go bullish right now? Maybe I will go slow. Maybe I'll step back. Do I want now? This week it's on neutral side, right? If I were to do any trades, may I'll do a delta neutral one. I'm not gonna do a bullish trades, except if I have a bullish thesis about a company. But overall, at the market level, at the index level, I'm not gonna do a bullish trade, not just yet. Let the barometer move into fear or extreme fear. That's where we need to, or at least I will deploy the capital. Maybe I'll do some delta neutral, right? Sell an iron condors or sell strangles to do a delta neutral trade, and wait for market to correct a little bit, and then go a little bullish on that one. So what's happening on the crypto side? Right, so on the crypto side, we're still seeing, yes, this Bitcoin reserve bill. Any thoughts on ETH here? We're talking about Ethereum, RC? Okay. Okay, so yeah, now we are in here. We can talk about ETH or BTC, but so I think Cynthia Lemons had this bill was prepared somewhere in June or July, which basically asked federal government to fill up a strategic, so basically do a strategic Bitcoin stockpile, sell some of the gold that Fed holds, and acquire, the bill calls for US to acquire 1 million Bitcoin, nearly 5% of the outstanding tokens, which now I think, whatever, I think we have acquired 1 million Bitcoin. Yeah, so we have what, almost 20 million already minted, maybe close to that. So that will be 5%. And the idea is, hey, Fed should sell some of the gold that it holds in its balance sheet and buy these 1 million Bitcoin. So that's the act. I've downloaded the draft bill, but I've not gone through it yet. But I mean, now with the Republicans in the House, maybe or may not get passed. We'll see, but that's what market is ripping higher. In any case, there are a lot of pro crypto people that surrounds president, and overall the sentiment of the crypto market is positive. Bitcoin as of yesterday evening or yesterday late night was 90K. I don't know, because where it is right now, this market trades 24/7. So things could be different. It's a little bit up. Now it's 91K. Ethereum, on the contrary, has not performed that much, right? So if we really look at Bitcoin to Ethereum or ratio, that hasn't worked out. It's been the alts. So RC, like you're saying, alt season just beginning. Not yet. I mean, Solana it hits its new all-time high at what, 210 or something. But it is expected, and that's what generally happens. First, the biggest one will move, which is Bitcoin. Then the other altcoins will move, and then the meme coins will. But I think this year we have seen a lot of action on the meme coins because of Solana, but hoping to see something on Ethereum as well. Now, coming to Ethereum, I think there was in recent conference, it was, I think that Drake, Justin Drake, he presented, is one of the researchers on Ethereum Foundation. He presented the plan for Ethereum till 2030 in terms of how they want to scale it. I think that at least the feelings that I'm seeing on the crypto Twitter on the Ethereum side is they're getting a tough competition from Solana. And that's why, I mean, Ethereum isn't performing as much as Solana has. Number two is there are questions on the overall strategy that Ethereum has taken, which is that the scaling solution that Ethereum has taken is to scale it on L2s and not on L1s, right? So we are seeing a lot of L2 projects, Arbitrum, Optimism, you got a Polygon, which is Matic, and then of course there is a Liquid network. So, but that does mean that a lot of fee and the TVLs is moving off from Ethereum onto those L2 networks. So that is one big concern on overall strategy around why did you choose to go this way in terms of having your users use more of your L2 products and then post the end result on Ethereum. So Ethereum like became a record keeping, but the actual action may be happening on the L2 side. So a lot of a fee and the value creation is being accrued on L2s and not on L1 Ethereum. So that's been one concern that's been being talked about. Whereas on, let's say, Solana has taken a different path. They say we want to scale up L1. Now I think it's a matter of a time. We'll see which one is right or not. Is Solana right now able to do it on L1 because they don't care about as much decentralization as they should if the projects grow bigger? Right? I think I saw a map wherein they say if we bomb this particular location, your Solana sequencer is gone, and then your whole network is gone, right? So you have to, when you're looking at these projects, you have to figure out where you want to be in that triangle, right? Triangle of a decentralization versus speed versus security. You have to sacrifice one. You can't have very fast network if you want to have it more decentralized, right? So those choices they have to make. And one of I would say that not the drawback, but one of the criticism that I've heard of Solana is because that it is still not decentralized, right? It is still, we've seen Solana going down at least 6 times that I recall, the Solana going down, and then the devs come together and restart the network, right? That doesn't happen on the decentralized network. How can one of the sequencer get jammed up and the other sequencers are it means there is a risk of a centralized server or maybe a limited number of servers choking up the network. So we'll see. From my perspective, I think it's what I feel is the Bitcoin has moved into a different narrative. I don't think it is facing the competition in that narrative, which is strategic reserve, store of value, and whereas the others, I don't know who's going to win. I don't know whether it's Ethereum going to win, whether it's Solana going to win. Or maybe stable, I mean, we may not even need Ethereum and Solanas, it will be all the stable coins. So that game, I think, is still open because in the past, we have seen suddenly EOS winning, right? Near protocol. We have seen a lot of these altcoins over different periods of time. Altcoins have come and gone. The two ones which have had a larger, bigger staying power has been Ethereum and Solana. That's why I'm referring to those two. But I don't know, is Aptos is gonna replace them? Who knows? So I think that field is still wide open. Currently, Ethereum is still the where you have a lot of projects, right? But maybe Solana will catch up. I don't know. I think I'll still want to wait and watch and see which network eventually emerges as winner. Or maybe we'll have two networks, maybe more than two. Like we have a Visa, MasterCard, and Discover in our TradFi. So why are we so hung up that one of them have to succeed? Maybe we'll have both. XRP is up. Yeah, I saw XRP was like up 111%. What's happening with XRP? Was there a news around XRP? I, in fact, tried to search for XRP. Okay. So maybe, okay, Ripple CEO meeting with Donald Trump and all that stuff. Yeah. And from that perspective, I think even the hated Cardano was also up. I mean, now this week it's up 74%, but last week also it was up like 80% or something like that. It is like, there are a lot of speculations going on. Who is going to be in the presidential crypto advisory committee? And I think there was some news or maybe a rumor, who knows, until we get some confirmation that Charles Hoskinson, the co-founder of Cardano and Ethereum and the CEO of IOHK, he's going to be the crypto advisor to Trump, right? I don't know. And then the Cardano ripped on that news. Now looks like Ripple met with Donald Trump. I don't know what's the subject of the meeting is, but if we are speculating that Brad Garlinghouse is gonna be there's some crypto advisor and all that stuff, then maybe it'll rip. So right now, I think it's all speculation. Can XRP be liquidated? From what I remember, it's like pending court cases. Okay, another reason why these XRP and some of the other coins have gone up is Coinbase have relisted them. So earlier, when the SEC had sued many of these tokens, like XRPs and I guess a few others, so these regulated exchanges like Coinbase and Gemini's and all that, those exchanges, they are delisted these shouldn't call it securities, these tokens, right? Now, I think this week Coinbase has relisted them And that may be a reason why some of these tokens are ripping. We see any other comments. Ripple didn't lose. XRP has 50 cents when we last talked about XRP, and now it has what, 70? Now it is, oh yeah, almost 100% up. With a lot of pro-crypto peeps surrounding Trump, SEC might lose a case against Ripple Labs. Yeah, so this is what, I mean, SEC, so far, SEC hasn't won anything of substance against any of these court cases that they have brought up, right? Some of the projects they settled with the SEC, that's different. But when it comes to in the court, they haven't had any good wins to talk about. Aditya says if XRP can hold but can't sell. I don't know. Oh, Coinbase doesn't allow you to sell? All I know is that I think Coinbase recently, Coinbase relisting. Okay, no, I think there have been some recent relistings as well. I saw it on Twitter, so should be right. Okay, tensions I move to Robinhood, you can buy and sell all day. So on Robinhood, can you transfer it to your own crypto wallet? Because on PayPal, you cannot. So tension, can you on Robinhood? Oh, no, it's the same as PayPal. Oh, okay. That's a problem. I mean, I ended up with some on PayPal because of the settlement. And then when I tried to transfer it, I mean, there is no option of transferring it. So I actually had to sell. And then so it's same as a PayPal. Okay, yeah, I hate them, those wallets who don't allow you to transfer. And then they charge you exorbitant amount. So that's on what else we wanted to talk about on the crypto. I think earlier there was some message, and so I'll cover on the crypto side. Oh, MSTR. Yeah, so when it comes to the crypto, all crypto related stocks, look at it. Let's go through some of them, right? Coinbase is up 100%, and this is where Coinbase started to rip. After the election results came out, Coinbase was 188, and it was like 334, almost up 75% in a week after the election results. Let's pick up MSTR. MSTR is like your leveraged bet on the Bitcoin movements. MSTR was around 239. Now it's close to 340. It's up 400, close to 400% for the year. So this is all kind of a leveraged bets on BTC. It is because MicroStrategy is raising debt to basically buy the Bitcoins. And now also talking about selling equity. $42 billion. And only Michael Saylor can do this. He wants to raise $42 billion. I think $21 billion will be a debt offering. $21 billion, he will sell MicroStrategy shares and will buy Bitcoin. I don't know, call him crazy or call him a genius, only time will tell. Sometimes I feel like maybe it's like a Ponzi scheme, right? You keep on raising money so that you can continue to pay to your private. I don't know, but it's crazy. I mean, you can't stop this guy. Bitcoin was up $75,000 plus, and they went and bought what, 22,000 Bitcoins at that price. So crazy stuff. RCs, how do you set levels for entry and exit for swing trading on high momentum stocks? I actually don't do much swing trading. I use options but I don't engage in the swing trading. But there are, I mean, Some folks look at RSI. There are some indicators that I can look at which tell me is it overbought or not. CCI, RSI, and Bollinger Band combination, or when it comes to looking for a bearish one, it's like a Bollinger Band, CCI, RSI, and stochastic. But I don't put my full faith in these ones. But anyway, I don't generally engage in swing trading in terms of to buy now and so that I can sell it 2 months or 3 months later. Attention says, MS, if you bought 250, 12, 22 for call, you'll be up 10x. Yeah. But if you could also lose that really quickly if Bitcoin goes the other way around, or if there is a little concern in the market. Look at the IV. Right? IV, you're paying so much for the volatility. What kind of trading you do? It's a buy and hold. I want to buy and hold, and my only trading is either my basically risk reduction or the options. I mostly trade on the options side, and but not on and the options trade will be mostly to reduce the risk in the stocks that I want to hold for long term. Covered calls, cash secured puts, iron condors, strangles, iron flies, jade lizards, call it any. Yeah, so sometimes, ratio spreads or back ratios, but every strategy, I'm open for every strategy, but my thesis is still, I want to hold the stock for long term. Now, what can I do to stay and hold the stock for long term is what I am focused on. There is too much of, I don't want to waste too much time in trying to understand a stock and that which I just want to hold for 2-3 months. If you want to take a swing trade, it's all based on just the technicals. Do I look at some of the technicals? Sure, I look at some of the technicals and see whether I should sell a covered call right now, or maybe I should wait, because my technicals suggest that it may be bottoming out. And if it is bottoming out, maybe I'll wait for it to little go higher, then sell a covered call. So that, yes, I'll use technical for that. But generally I don't do or get into a stock to just hold it for a couple of months. My holding period, ideally, I want to hold it forever, but then there are reasons for which I have to sell the stock, and then I'll sell it. All right. So on the crypto side, you don't really have to buy Bitcoin if you want to get exposure to it. Now you got ETFs, and now these ETFs also have been ripping higher. FBTC, pick any ETF. I think we looked at all of them are up like 19-20% for this week. And if you look at election results, that's on when FBTC, and I picked up FBTC because I hold it in my portfolio. You can pick up anyone, IBIT or ARKB, BI2, any of the ETFs. This is where the election results came out, close to 60, now sitting at 80, almost 30% up after the elections. Hit a new all-time high. These are seeing some insane amount of flows, seeing some insane amount of volume per day. It has surprised everyone. Everyone who told that there is no interest of institutional investors in Bitcoin have been taken by surprise. Are you trading any options on your BTC? Not yet, but I think this week CFTC has also approved options on one of the ETFs. I don't recall which one. SEC has already approved, but there is a CFTC. There are more than one agencies involved in approving options. So once the options get listed on any of these ETFs, then I will. There are a few markets a purely crypto market where you have options being traded on, let's say, spot Bitcoins, but the bid-ask spread is so wide, and I really didn't want to engage in that one. So most of my crypto stuff so far has been just buy and sit tight. And if I were to deal in options and let's say try to hedge my risk, I'll use one of the other ones like Coinbase, etc., which are like a proxy of the crypto economy to hedge it. Do you trade any futures? No. I get everything that I need from the options, so didn't really see the need of futures. Those who've been attending for 4 years know that every year I'll come and say, maybe this year I will do futures. This year maybe I should do futures, and never got to dip my toe in futures. Never really felt the need. I mean, you can get a decent leverage on futures, but I don't think I need that leverage. I have portfolio margin, so that's good enough for me. Now, when it comes to the BTC, there are options on BTC futures that if you want to try that out. I've not done it. So really my crypto has been just buy and sit tight. I'm waiting for the ETFs, have options enabled on ETF, and then I can do those. All right, so FBTC has been ripping higher. Look at a Coinbase. Insane moves on Coinbase as well. Coinbase was up like 75%, close to 180 to 334. Other stocks that I saw movements was like Axon Enterprises. These are some of the post-earnings stock moves. Axon Enterprises reported earnings in the crazy move from 450. So like, this looks like 460 all the way to 600. This is the stock that, do we have Alfred? So this is a stock that I had analyzed it. I had bought it. But then when I'm looking at their operating margin and all that stuff, I'm like, why should I pay so much for the stock? And I'm talking about when the stock was around 250-ish, 250-ish to 300. I could never build it into a big position. Then I'm like, you know what? Leave it. Not for me. I couldn't convince myself to build a bigger position beyond the initial, on radar position that I had. So then I sold that on radar position. And I'm still flabbergasted in terms of how the market has rewarded the stock. Maybe I should go back and look at it. They have added a software component to its overall business model, but the margins are still low. So they have a huge moat, and I think that's what the market is rewarding it. But yeah, these are some of the stocks that when you think, oh gosh, I should have just bought and held it. It got away from me. Maybe it did, but something I'll keep on. Whenever I see Axon really performing, it reminds me, damn it, I should have just bought more. But you can't buy all the great companies. But some of my analysis has saved me more. So this is like I'm actually becoming greedy. If something I'm not convinced about, I think it's better I don't buy it. Did they announce AI-enabled taser? I mean, they have so the stock actually started performing a lot better after they've announced their AI cloud, not the AI cloud, but the software cloud, right? So beyond the tasers, their biggest, I think the more valuation is coming from the cloud that they're building, where all the videos gets uploaded and then they use AI. So to quickly, find out the evidence and basically write all the reports that the police officer will have to write. So it's a great business model. I think it's a company's great one. I'm just concerned about valuation. I have no concern on the business, but the stock damn thing has been always expensive. And maybe the great companies always stay expensive, right? It reminds me of not touching Amazon when it was $600. way before split. And then I eventually ended up buying when it went to $1,600. I don't know, maybe Exxon will have a similar stuff. Who knows? But so Exxon had a huge move. What is Disney? The Mickey Mouse setting is out, looks like in order. So I think market is now little more after, I guess, almost a year or 2 years of uncertainty around Disney on what they're going to do, who's going to be the new CEO. Of course, they still don't know who the new CEO is, but I think Disney is pretty clear that they are very serious about finding a replacement for Bob Iger. They don't want Bob Iger to come back after 2026. So the chairman, Jim Gorman, ex-Morgan Stanley CEO, he's pretty serious about finding the right candidate. Also, it's for the first time that Disney has given Wall Street an insight into not only 2025, to not only how the 2024 outlook will be, but 2025 and 2026. So Street is now assuming maybe they put their house in order. And of course, I think they had a better performance on the streaming side. So stock was up like 10%, and a day later it went up another 5%. So still recovering, hasn't been where it was during the COVID high, which was, I think, close to 150. If I recall that, let's go back 5 year one day, close to 200. Right, that's what its COVID high was, close to 200. Yeah, still way back, still very low from its all-time high, but seeing some nice recovery based on its earnings. Are you familiar with Enbridge? Nope, that's not a company that I've ever looked at. Do you want me to cover Enbridge, Judy? All right, you have to give me two things. You have to give me the market cap and who the CEO is. There's a prerequisite for looking at any company. And then maybe I'll look at NVIDIA, and if you're not familiar, this is how I'll look at the company to see if this deserves further attention or not. So tell me what's the market cap and who the CEO is. RC is asking, do you invest in dividend stock ETF for dividend income? My only dividend, Greg Abel. Sorry, RC will come back to comment. Is that the same Greg Abel Berkshire guy? Or is it a different Greg Abel? Because Greg Abel runs Berkshire Energy, all the energy under Berkshire Hathaway, except the insurance. Insurance is with Ajit Jain. Everything else is under Greg Abel. So he's going to be the next Berkshire Hathaway CEO. Oh, it's a different one. Okay, leave it. So if it was like a Greg Abel, I was like about to say, okay, buy it. He is a wonderful guy. Okay, it's a different Greg Abel. All right, coming back to RC. On a dividend stock, my only exposure on the dividend stock is SCHD. I don't own individual stocks just for a dividend from a dividend perspective, because I don't need a regular income stream right now. And if you ask me, dividends are a horrible way of returning capital to shareholders. It's not a good way of returning capital to shareholder. If I'm a business owner, which I am because I own the stock, why would I want my business to pay the tax? And then when I receive it as an owner, I also pay a tax. It's such a horrible way. If a company is able to reinvest the same amount of money and generate the capital higher than what I can do, let's say, investing in T-bills, then I don't want that company to return the cash to me. It's a horrible, horrible way of returning or increasing shareholder returns. rather than paying dividend, I would have them buy back the shares. There are reasons why institutional investors love dividend historically. Since 1860 or whatever, the 1800s, late 1800s, 1900s, the only way to measure the worth of a company was, because you didn't have any of these new concepts, was how much capital, how much dividend it was paying. And then there are investors who invest because you need the regular income stream. Maybe those investors are have a lot of those are have a funds from retirees, and they have to return and generate income for those retirees. In that case, yeah, dividend makes sense. For me, dividend doesn't make sense. Now, you ask me, do I have any ETF? I have SCHD. But my reason for taking exposure in ACHD is when I feel that the S&Ps continues to go higher, and you get a little concerned. I'm not saying I'm a bearish, but if you see a correction in S&P or in the market generally, the dividend paying companies fall less as compared to the growth companies, right? Because they are positive cash flows. They are generally big established companies. I hold a lot of growth companies in my portfolio. To counterbalance, I use ACHD because it has got all the big dividend paying companies. But the idea is not to get the dividend. Idea is to own the companies that just won't fall down or that will fall down less if the market corrects. So that's it, just little to hedge it. And it pays, I think, 3%, 3.5% dividend. So this is ACHD. If you look at what's the dividend, and its expense ratio is very less. Allow the like 0.06%. It's even cheaper than SPY. And where's the dividend yield? Right, no, it's yielding what, 8.41%. That's crazy. Something may be wrong. Generally, it yields around between 3 to 4%. And this is what I'm more interested in. I don't want to buy Cisco alone, because if I have to buy Cisco to reduce my cost basis, I have to sell options against it. I may want to buy then 100 units of it. Otherwise, I have to do a spread, and you may not get enough premium. And then I can't do it individually. So what I do is ACHD and then basically trade options against ACHD. So that's the reason I have ACHD. Yeah, ACHD yield is around 3.55%. Yeah, that's what I thought. It's between 3 to 4%. Maybe, am I looking at the right place? It's that's maybe something wrong here. So that's my reason on the dividend side. Not that I'm need this, but because it has a companies which probably won't, which are pretty stable companies, and if the interest, anything happens in the market, growth companies fall more, I'd need something to counterbalance that. So no JEPQ, no. I mean, if you look at a JEPQ is they generate through the covered calls, right? Or the JAPI and JEPQ. So JEPQ is QQQ, and they do basically covered calls, right? What's the dividend yield of JEPQ? It's 12, 10%, 10%, 11%. And what has JPQ done? Year to date, 12%. Right? So overall, you got 22%. It's almost same as QQQ. And in some cases, I've seen actually, if you held JPQ, you were worse off than by just holding QQQ. And now if you hold JPQ, every dividend that you get, you basically end up paying taxes. And I covered these, the dark side of these JPs and JPQs and conies in one of the session, you really have to look in whether those dividends, or if you're in a Roth, you don't have to worry about taxes. But I know a lot of folks buy the traditional, the regular brokerage account. You really have to look at, are these qualified dividend or non-qualified dividend, like MSTY and all that. So last year, and I forgot which report I pulled up, 100% of the dividend was non-qualified dividend. So you end up paying a lot of taxes on that one. Why do that? Is there a place? Yes, there is a place. There is a time for doing these things. There is a type of an account in which you can hold it. Just don't go blindly and buy these things because it's paying 10%. There's always a catch. There is no free lunch in this market. If there's a free lunch, US is such a great capital market. If there's a free lunch, it will be arbitraged immediately. You just need to understand what the catch is. And then you have to say, are you okay with the trade-off? There is always a trade-off. You can't get anything without a trade-off in the market. If you're not able to find out what's the downside of it, that means you haven't really done your study well. So there is always, always, always a trade-off. Some of these MSTYs and all that, the trade-off was the dividends are non-qualified dividends. So you end up paying your regular income tax on it. So yeah, if you're buying in Roth, in your IRA, in your retirement account, maybe you're okay, right? But then what do you do with the dividend that you received? You have got a reinvestment risk. You have to figure out something else for that. So that is why I don't do JEPI. I didn't do JEPQ. There is a reinvestment risk that I need to worry about. If I'm at a stage where I need to have cash flow required, then maybe I look at, right now I just get the cash flow by selling the options. So I don't need a dividend incomes. And I hate, let me put it that way. If it is okay to pay the dividend if you can't grow the company. I don't know why Meta and Google are start to pay the dividend. They're just trying to send a signal that maybe they're sending a signal saying, hey, Wall Street, please understand, we can't continue to grow at the rate at which we were growing. So now we are moving into a little more mature phase of a company. Then in that case, maybe you'll give a dividend. You're okay to return the cash to your shareholders. Let the shareholders make better use of that cash. But if you, as a company, can have 15-20% return on invested capital, please don't give me dividend. As an owner of the company, which if you buy a share, you are owner of a company. That's what our mentality or my mentality is. So that's why if you look at my profile, I'm saying I own businesses. And then someone will ask me, but you buy stocks. I mean, what that means? That means I own businesses. I don't want my business to give the cash to me and then I pay to IRS. Come on, keep the cash with you, grow the business. Rocket Lab. This is a stock that is again very active on a FinTwit. It was up like 50%. This is again, I don't own the stock. I haven't analyzed the stock, but this is in the same category as SpaceX. Maybe at a lower scale, they'll do smaller satellites. And the stock was up 50% based on, or 50, 45%, whatever, based on some earnings. So some earnings moves that I saw on some of these stocks. Of course, there are a lot of other stocks that moved higher. We can't cover every stock in 2 hours that we have. One other stock I saw, we just ripped higher for no reason. I mean, for the reason that you will think, why? Which is the Palantir is, I think someone had asked about Palantir, so let's cover that. Palantir ripped higher because the company is moving from NYSE now to NASDAQ. Right? So just on that news, it's up almost another 10%. I don't know. I've been a shareholder of Palantir for 3 years. I haven't felt so much anxious as much I've felt in last 2 weeks about my holdings. I'm bullish about the business. not bullish about the stock. I think it's a crazy, that is what I see on the stock. I'm like, how crazy can this is not sustainable, guys. This is not sustainable. Maybe it's a GME, who knows? Right. So I had a covered call, and I think I'll share, because some of the stocks got called away. In that case, I also have a covered call at 45, which for the 15th November expiration, I didn't defend it. Let it get called away. I think this is too much too soon. Yeah, company generated revenue, it's up 30, but it's 30%. It's not up 100%. That the stock will go so crazy. Operating margin still sucks. They're still diluting shareholders, but to the tune of 7% per year. Much less than in the prior years where it was like 30%, but still 7% is huge. It's all based on what they are signaling, warp speed. This is the only AI play and all that stuff. So I think, and of course it got inducted into S&P 500, but that happened, where did S&P 500 added? I actually, on my live account, took a note. It got added into the S&P 500 when the stock was almost $32. It was right here. I don't know if you can see this, but this is where it got added to S&P 500. Then this is where Peter Thiel said, okay, he's done selling. And this is now is that got added to NYSE. Oh, sorry, a move from NYSE to NASDAQ. So S&P 500 is almost up like 100% since it got added to S&P 500. And again, I'm a shareholder. We talked about it 2023, and I said, why I'm bullish about it. The stock was at $6. I can't have the same bullishness when the stock is at $66. So so I'm not defending it. I still have some covered calls at 60. On Friday, in fact, I sold a covered call at 90. I sold it at 90, 75, 70, and at 60. Right? If those gets called away, it's fine. It is going to be next NVIDIA, maybe, may not be. But we'll look at NVIDIA and this. I'll show okay, so we'll look at the stats and why I don't think it's next NVIDIA, at least not for now. NVIDIA grew like this. There's a reason, right? So Palantir is now the best performing stock in S&P 500. It's up almost 300%. It took over Vistora Energy, right? Then third is NVIDIA, fourth is Exxon, and then there are rest. Surprisingly, I was surprised to find this United Airlines in this, right? But is the business that great? That like 300%? I don't think so. So anyway, and then on Friday, I saw this tweet. It's coming from a board member of Palantir. That makes me a little concerned. We are moving Palantir to NASDAQ because it will force billions in ETF buying and deliver tendies to our retail investors. Player haters, be aware that we've been hated for decades. Everything we do is to reward and support our retail diamond hands following. Yeah, so and if you know the history, will not get into history. They did a direct offering rather than doing an IPO. Bankers didn't make money. Wall Street doesn't like it. It's all driven by a lot of retail investors. And of course, Dan Ives, right? I don't know. I was even more concerned. And of course, this tweet and the account got deleted immediately. But by the time the screenshot was everywhere on the Twitter. And then I went and looked into this person. He's on the board of directors. He's a board of director on Palantir. Is this what you're focused on as a management team? By hook or crook, by any move, just increase the share price? Guys, I want you guys to focus on business, not this stuff. So, let me show you why. And again, we're not dissing on it. I mean, it's been one of the best performing. It's stock for me. I think I tweeted about it. This is my 10x but I get a little concerned when I see this thing. And then this is how, okay, let me also bring up NVIDIA since we talked about both. Right? NVIDIA Q2. All right, so, and when I look at the companies that I want to own, this is what I want to focus on. I give a bird's eye view to know if I want to spend more time on this or not. So this is, let's focus on this one. And NVIDIA versus Palantir, the battleground. Okay, so this is NVIDIA. Let me bring in Palantir. And, oops. This is Palantir. Okay, right, it's Palantir, right? Okay. So when I'm looking at the company that I own, this is what I want to look. To give me a quick 5 minutes overview to see if I want to spend more time on this company or not. So some of you have given me the companies for the next week. I got ADP, and another one, maybe, yeah, I'll be able to do 2 of them. So we'll look at, I want to focus on it's a high quality business or not. Some of the things that I look in is gross margin, return on invested capital, right? Dividend yield, capital allocation, basically. Are they buyback shares or giving dividend? How is the profitability? Are there secular tailwinds in this industry? How capital intensive the business is? Is it generating cash flow or not? More reds means I need to be more careful about it, right? So this is NVIDIA. Freakingly, 10-year, 15-year average return on invested capital is 18%. Right? Operating margins to the tune of 60%. Right? It's not just tailwind. If you go back last 10 years, it's 38%. And let's say I'm going to go back and look at as if I'm sitting at the end of 2021. There's no AI tailwind, right? This is ChatGPT was released in 2022 November. So I'm right now sitting in 2022 January, right? So there's no AI tailwind. Now I'm going back looking at 1 year, 3 year, 5 year, 10 year. Still return on invested capital is 20%, right? Operating margin has come down because now we take out all the AI component of last 2 years, but still 60%, 50%, right? Come to the right side. This is Palantir. Operating margin single digits. It was negative. Oh, sorry. Return on invested capital means the capital that I'm giving to the company, which is through my shareholding, how much, if I give $1, how much is it able to generate? Economic value. In this case, it is able to generate last 1 year average $103. Prior to that, it was just burning it. Operating margin sucks. Profit margin, forget net profit margin. So, and revenue growth, fine. 17%, 27%, trailing 12 months. If you look at it, it's 30%, this quarter it was 30%. It's a good revenue growth. Not as great as, let's say, NVIDIA. So this gives me concerns on where the Palantir stock is being traded. And hence I'm like, okay, I'm not going to defend it. Right? So now the question is, NVIDIA putting up these great results, what is market expecting for NVIDIA to do? Right? So if I look at Mark is now expecting them to do $33 billion in October. and 74 cents in EPS. Right? Last quarter they done 67 cents. So it's it's gonna be a 100%, almost 100% jump in EPS if I look at 2023 quarter, 2023 Q, the October end. Now the market is expecting 100% jump in EPS. Revenue they did was $18 billion. Now market is expecting them to do $33 billion. So if NVIDIA doesn't give you 100% increase in revenue and 100% increase in EPS, it basically fails market expectation. Right? Look at a quarter to quarter NVIDIA's results. So revenue up 122%. This is as of Q2. 3-year CAGR 67%. Operating income is up 900% at 3-year CAGR. It's a good business. Palantir, it's an okay business. So even though I've been a long-time bull on Palantir, I'm bull on the business side. 30% growth is good. Plus they have a tailwinds. I'm not that. I can't justify where it is trading right now at 66. Given the margins that and the return on invested capital that it produces, or even looking at a future forward PE, if you want to look at a forward PE, what's a forward PE? 127, right? PEG ratio in which is like almost 5. Not for me. Does that mean I'm going to sell everything? Probably not. If all of my covered calls get assigned, my position will be cut in half and I'll be okay. I'll use the rest half to do the GME type so that I don't have a remorse and ride the rest if it becomes a GME. So that's my strategy on Palantir. That's what I'm going to do with Palantir. Yeah. You do what works best for you. At some point of a time, I have to start thinking about, hey, is it really that great? As much as the stock price is suggesting, markets can go crazy in a short term. Or in the long term, which is what I want to focus on. Eventually, what matters is your earnings growth. How much can you generate cash flow, and market will decide what the multiple, which I can't control. But I look at Palantir as a business, not that great. Sorry, the not as great as what the stock price is suggesting it to be. So from my perspective, it is way overpriced. I'm okay to buy and hold overpriced. I learned my lesson in couple of times not to hold extremely egregiously overpriced stock, which I think Palantir is. That doesn't mean the market will correct it. There are a lot of other forces in the market for the short term. It could continue to go higher. In that case, I'll enjoy the ride with the rest of the stocks that I own. And if it corrects, I will thank myself. Oh, at least I've sold some and the covered calls made money. So this is what I've done. SMCI found an auditor, and I think after Friday, they sent a news saying they'll be able to file the quarterly results. I'm not touching this for the reason that I talked about earlier. I mean, I don't have any faith on management. And if I can't have faith on management, then I just don't want to be in the stock. But yeah, I think the stock jumped up like 16-17%. What do you think the Palantir fair value price is? So right now, and I don't want to, fool myself thinking that I can find out what the fair value price is, because the traditional valuation methodology of doing a discounted cash flow doesn't even apply to Palantir right now. The company is not at a stage at which I can do a discounted cash flow. Doesn't make sense. It's not even focused on generating cash. But what I can see is the level at the stage at which it is currently. How much am I paying up for that growth? Not from a TCA perspective. I'll be okay to buy it at, let's say, at a peg ratio of 3, not at 5. So maybe $40, $45, based on the fact that how much is analyst expecting it to, I don't check how much analyst expecting it to grow next year. But yeah, maybe $40, nothing more than that is what I'm looking at a Palantir. But that, like I said, doesn't mean that the stock will correct tomorrow. But if I were to sell a put, maybe I'll sell at 40 or 45. I don't want to sell a put at 60 right now. So this is some portfolio updates. Bought Arista Networks after earnings. Didn't find anything bad in earnings. Stock has corrected a little bit. So added to my position. If you guys recall, this is new ticker in a portfolio for this year. I had a NEO put got assigned to me. So that resulted in stock transaction. Jumia put got assigned to me, resulted in stock assignment. I bought Alibaba a little bit, bought ASM a little bit because it has corrected a lot. India, which is India ETF, I had a put which got assigned to me because India market has corrected. I had sold a put at 55. I didn't want to buy it at 59, and now it got assigned. SE, C Limited, a put got assigned. So ended up having these stock transactions in my portfolio. These are the buys. The sales, Palantir stock goes out because my covered call got assigned. I still have a few more. Snap, I actually sold. I'm done with Snap now. I don't have any more Snap in my portfolio. So no more reviewing unless you want me to. I'll not go through earnings of Snap. I mean, at the end of a day, I decided how much can I stay with this. My only reason was I was just trying to avoid taking loss. This is the bias that we have as an investor, right? Loss aversion. So I bought, my average buy price on Snap has been $17 some cents. I've owned it for 4-5 years. Reduced my cost basis to $11.50 over 5 years by selling option premium. And then the stock was 1076. I'm like, if I sell it now, it's a 75 cents loss. Might as well sell it because I wanted to buy ASML and I needed to raise the capital for it. I'm like, okay, Snap, you're out. You've been a bad caretaker of my capital. You have $8 billion of accumulated losses while the management have enriched themselves by giving $9 billion worth of stock options. Ever since you've gone public, you have a no respect for the money that I give you. I don't want to be with you. So I sold my Snap, utilized that capital to buy ASML. So that's the story on Snap. I'm out of Snap. SE, because the put got assigned, I kept some shares, sold some. XPEV EV got assigned. XLF, I had a covered call that got assigned. This money I rolled into Baba, and XLF got assigned. So that's which I didn't buy it. I think maybe I'll sell a put at 45 later. I think it's run up too much too soon. I don't want to chase it. This is a deregulation trade. And if you look at 1 year, 1 day, look at the jump out here. And well, that's fine. So XLS, I mean, I still hold it in my portfolio, but these are the stock changes that have happened. Not a recommendation. Don't go and buy Baba because I bought it. Don't go and buy ASML, but I just want to be transparent. Naresh, what do you do with the RBLX? You missed the session in which I said that I sold RBLX, and I had a big tweet around why I sold RBLX. And I know after earnings, RBLX has gone high. But that's okay. I didn't look at the earnings. Did they change anything in the business? But the 17 years it's been in business, never turned up operating profit. And now all the concerns around pedophiles and all that stuff, I could never convince myself to create a bigger position in RBLX. So I sold it, but I think I don't recall. I think that was a profitable because I'd sold so much of an option premium on that one that once I kind of broke even, I'm like, okay, I'm done with the stock. All right, what are the earnings coming up next week? And what am I watching next week? XPEV, Walmart on Tuesday, Neo, and of course the big daddy NVIDIA. Then Baidu, Nanox, and Copart. Copart again from a fact that I want to, analyze the stock and maybe build a position if possible. But from that perspective, I don't hold Copart in portfolio yet. No meeting next week. I am traveling. So go and find something, other useful stuff to do for the next week. There will be no session next week. I already canceled it on Meetup. So you shouldn't be getting any notification from them. Geraldo asks, what resources would you recommend to learn and master running DCF? So first of all, I am not a big fan of DCF because it needs you to think about or future, and all your inputs are coming from what do you think the revenue gonna grow? How much do you think the margin is gonna grow? Eventually, how much do you think the free cash flow gonna grow in future? Now, given the fact that the business world changes so quickly, I think your guess could be and anyone's guess could be as good as anyone else's. So I'm not a big fan of doing the DCF, but what I do is I know today this is the price. I could do a reverse DCF to know and I know what is the today's cash flow. I know last trailing 12-month cash flow, but that is, I don't have to take any guesses. That's is available in the financial statement, and the price is available on the stock market. Now, looking at this, I can find out how much is this current price, how much free cash flow is it pricing in currently. And then I could see, can the company, given the history of a company, is it too much too soon? If, for example, if it says the free cash flow growth, which is priced into the current stock price, is 50% for the next 10 years, that's going to be very difficult unless you're NVIDIA. Even Google doesn't do it. So that's a straight away red flag for me saying, oh, it's too highly priced. I don't have to know anything about the future of the company. Sometimes you know that there's been no business that can grow its free cash flow 50% year over year for the next 10 years. Then you grow it for whatever your terminal rate is. Right? So I do reverse DCF, then trying to do DCF. Wall Street loves to do DCF because that's what we've been doing it traditionally, but then you need to make all those guesses. There are templates available. You can go and download a template from Ashwa Damodran, who is a professor, dean of valuation from New York University. He's got all sort of Excel sheets, but the output of the DCF will be as good as your input. How accurately can you predict the future? Which for me, come on, guys, tech changes so fast. Businesses change so fast. So the output will be as good as your quality of your input. I would rather focus on reverse DCF because I don't have to guess. I only have to, it tells me what growth is stock price already pricing into it. And then I see, has anyone in this industry has ever grown? Has anyone outside of the industry has ever grown? What are the best business models have done? And then it'll give you some idea of that. All right, let's look at 13Fs. Okay, so I looked at 79 fund managers and I've consolidated their information into one place to give me an idea of what the smart money is doing. So with the Chinese stocks, what's happening on the Chinese stocks? Anything that stands out for me on the Chinese stocks is Michael Burry's 25% of his portfolio, and this is as of end of September 2024. So things could have changed. Now we are already in mid of November. So it's almost 45 days out. And if we had sold off, we don't know. We'll only get to know in the next 13F. Michael Burry and David Tepper, they have huge positions in Alibaba. David Tepper has a position in FXI, which is a Chinese large cap ETF. So I think he gave an interview, buy everything related to China. Who else has K-Web, Altimeter Capital, Brad Gerstner. David Tepper also has a big position in PDD. JD.com, Michael Burry has 24% of his portfolio in JD.com. So this is a new position he added. Wow. So that means almost 50% of big short guys' position is in two stocks, is in China, Baba and JD. Okay. You do what you want to do. You shouldn't just follow these fund managers just because they did it, but it gives an insight of what they may be thinking. If you are a follower of Michael Burry, then this is what his portfolio. I mean, on Alibaba, he's big on Chinese stocks. Okay, next one. What did they do with the chip stocks? So I looked at the top 10 chip stocks in SMH, which is a semiconductor ETF, and seeing if any of the big so-called smart money of those 80 that I track have added big positions in it. Guy Spear has got big on MU but didn't add anything. Who has some big additions? Did anyone exit? So one, Daniel Loeb exited completely out of Micron. Li Lu, who also manages, I think, Charlie Munger's personal money, he is out of Micron completely. Nvidia, more ads. A lot of fund managers are buying, then they are selling. What else? TSM, known as a huge position. Daniel Loeb has almost 4%. And the Wedgwood partners are 8.5%. What stands out? Nothing much. Texas Instruments, Qualcomm, no big positions. ADI, not big one. Intel, not much movement this quarter. I mean, Hillman increased their positions by 32%. Other than that, not much. Okay, next one. Top owned stocks. Alphabet. Looks like Alphabet, like 34 funds own Alphabet, either on the, Google, or Alphabet has got two tickers. That's why it's having two separate tickers. Microsoft is owned by 32 funds out of the 79 funds data that I have. Visa. Why don't I own Visa? Don't own Visa. 25, and Visa is a great business. Then Meta platform, Apple, surprisingly, only 25% actually have positions in Apple. And we'll look into some of the individual ones which you want to do it. So this is the last topic for today. Berkshire Hathaway, 17 have the Berkshire Hathaway. UNH, United Health, 16. Next is top bets. So bets means which fund managers have most of their money invested in it. Carvana, 74%. One of the fund, the maximum 74% is in that fund. Four funds have Carvana in their portfolio. St. Joe, I don't know what that is. Some funds, 14 funds have yeah, so in the top 10, 14 funds appear in which funds have 70% of their portfolio in Berkshire Hathaway. So these are the Icon. I think this is the Icon Enterprises own fund. These are the big bets. Now, these are the companies in which fund manager will increase their positions by top 10 positions. Microsoft, Walt Disney. So so these are as of September. They did know something. Sorry, I don't think they knew anything, but the one thing we know is that the stock is up 10% or then another almost 15% after earnings. Amazon, Alphabet, Visa, Vesco, CVS, Nike, Adobe, Starbucks. Oh, so five funds have added to Starbucks. So these are the top 10 positions. Now we can look at any other way that you want me to. And then we'll call it a day. So we look through China. We look through the AI plays. Yeah, Max 7. Okay, this is going to be so I pulled up every data related to Max 7. And what is surprised me was as of end of September, I see more sales on the Max 7 as compared to buy. Look at Apple. Right now, Warren Buffett sold another 25% of his Apple position. Now his Apple position is down to 26% of his portfolio. Who are the other big sellers? Who completely exited? Altimeter Capital completely exited the positions on from Apple. This is Brad Gerstner. Who are the big sellers? We got a Li Lu sold 60% of his position in Apple. You see a lot more sales in Apple. Not many are adding to Apple. Tesla. No one added to Tesla. It's only a few of them actually sold Tesla. Amazon, more reductions. There are a few additions that I see, but I think Altara Capital Partners has got 20% position. Other than that, there are more sales. Right? Nvidia is the only one where I saw more buys, additions than the selling. Meta Platforms, again, more sales. Who exited completely from Meta Platform? A Canadian hedge fund, Prem from a Fairfax Financials, completely out of Meta Platform. Who this Viking Global is completely out of Meta Platform. Right. This is one Microsoft. Again, you see a lot more selling. Stanley Druckenmiller sold almost all his position in Microsoft. Now he's holding only 0.63% of his portfolio in Microsoft. So if you got into Microsoft because you followed Stan, he's already out of Microsoft. What else? Who added to Microsoft? Bailey Gifford has added from maybe 2% to added. He added another 46%. But still it's only 2.36% of his portfolio. So overall, I would still say more sells than buys. And then this is Alphabet. What's happening, guys? Max 7, big money has sold on Max 7 now. They don't like Max 7 anymore. What do you think? This is as of end of September. What are they seeing which we are not? So this we already looked at. What else? So then I went and I looked at, okay, what is money manager doing to the funds that I own? And we can do it for any one of yours if you are interested in is, tell me which one you are. So I own Melly, so I wanted to look at what is, who owns Melly, who added to. So happy to see that Stan Druckenmiller added, increased his position by 1/3. Maybe he sold some Microsoft added to this. Or Bailey Gifford has reduced a bit, but still hold almost 7.5% of his portfolio in Mercado Libre. So I'm in good company here. Any other stock? You want me to pick up some stock? Want to see who else? ASML. So Daniel Loeb exited out of ASM. So he's exited out of all semiconductor. Something he knew. He sold all his MU, he sold all his ASML, and Poland Capital, couple of them actually added to their ASML position, very small. But Daniel Loeb is completely out. ANET, Arista Network. And we can also review it in terms of individual fund managers. What do they hold? 0.72, which is Steve Cohen. Oh, sorry. So let's look at everything. Hold on. I had a filter, which I should not have it, right? So hold on. We want to look at everything on Arista. Okay, so it doesn't change the result. Palantir, no institution. I actually looked at Palantir yesterday. There's no institutions have any position in Palantir. It doesn't even show up, at least of the 80 that I track. I think Palantir's institutional involvement only started to happen in Q3. Sorry, in Q4. So we might see into the next the earning report. So basically, so let me tell you, these are the fund managers that I have a data for, almost 80 of them. So if you are interested in any specific and it's not here, then I don't have the data for it. Okay, NVIDIA. So let's look at my stock activity. Let's go to NVIDIA. Yeah, so NVIDIA, David Tepper, again, he sold a little bit of NVIDIA. Some of them added to NVIDIA. Steve Cohen, he has added to NVIDIA, but it's only 1% of his portfolio. So no fund man, I think the maximum that fund managers hold in his portfolio is what? 14%. Altimeter Capital is big in NVIDIA. 14%. What else Altimeter holds? Hold on, let's look at what else Altimeter holds. ALTIME, Altimeter Capital. So Altimeter sold off Apple, Altimeter sold off PDD, Dell, Amphenol, Webtoon. What did he new position? Crange, KWeb, back in Tesla. If you recall, previous quarter, they sold completely Tesla. Now they are back in Tesla this quarter. They started a new position in TSM and new positions in all these Broadcom, Futu, Zillow, Duolingo, Lineage, not, yeah, Lineage. Yeah. So his biggest position is, wow, Salesforce. No, what's the biggest position is Meta, 19%. Next is Uber, Snowflake, NVIDIA, Microsoft. That's what Altimeter has done. What do you think of a firm? I'm not too bullish on the long term on the BNPL. It's a new in US, so we see a lot of I would say excitement about BNPL. But I did read through a report in Australia where the BNPL was the first, BNPL had first, origination in Australia. And after 3 to 4 years, realized that the consumers were not any better than what they were using credit cards. Right? So they started to have the similar level of defaults as they had when they had a credit card. So overall, consumer life wasn't better by going through BNPL after 4 or 5 years. Right? So BNPL is still new in US. We are 3 years in it. I still want them to prove themselves before I commit my capital to any of the BNPL companies. I know Klarna is about to go, they want to go public. Affirm is already public. Now, all other fintech companies have their BNPL arms. Square has got, PayPal has. But I am not, as an overall sector, long term, I don't see what the moat is and how they will be any different from what the other financial firms are going to do it. So as a sector, I'm not, as a business, I'm not too keen on this. Are you planning 13F spreadsheet? Uh, yeah, I can share it. If you're on Twitter, I did post it saying, hey, just ping me with the name and I'll share it with you. Looks like you probably didn't check on the Twitter, but let me just find it. I'll give you the link here, but sometimes it gives you a problem. Yes. Okay. Okay, so here's the link. CRM, you want to look at CRM, who is having CRM? CRM. Who got out of CRM? Poland Capital got out of CRM. They are a value investors. Uh, who added a new position? Lone Pine. I don't know about these guys. Altimeter, they added another position in CRM. Now the CRM is what, 1.86% of their position, right? CRM, 1.86%. But not too much of an activity on the CRM. Shopify, I already own and I'm still bullish on Shopify. But let's see who bought or sold Shopify. No sales. Tom Gaynor owns it, so that's, I'm in a good company. Bailey Gifford. So Bailey Gifford is very active across the world in anything related to e-commerce. So he had positions. He's one of our early investors in Amazon, then in Mercado Libre. Then he also had positions in Jumia. I think he has a position in C Limited as well. Let's see. C Limited. So when Bailey Gifford is there in e-commerce, I know probably they know their stuff. And I see their name popping up in a lot of e-commerce companies. Yeah, they are UK based. Yes, you're right. So Shopify covered call got called away. That's fine. You didn't lose, right? You didn't lose. You only gained more than when you put your covered call. So I think I had a covered call at Shopify at 100. I defended it. I rolled it out to now December, and I also sold a put against it. So if it comes back, maybe I'll close the option trade for profit and I'll still hold the stock, which will reduce the cost basis. But I defended Shopify. I just didn't want to let it go. Like I let go my Palantir, I didn't want to let go my share, so I defended it. So Shopify, which one we were looking for? What else? Any other stock you want me to look at? Or you want to look at any fund manager activity, etc. This is the last topic. Ramesh says, I do the same. Yeah, if you want to defend it, then defend it. I mean, there are ways to defend the option trades that are going against you. It's just a choice that you have to make, and you have to live with that choice. What I what I don't want to do is I defended my covered call at 100 and I roll it out, and now the stock goes back to 90. And then I say, oh gosh, I should have let my stock get called away at 100. uh, you can't always have what do you wish for? So yeah, if it stock goes to 90, it's fine. I'll still hold it. So the service now, not much on the fund activity side. A couple of them have reduced their positions as of end of September. And Tiger Global has it. I heard something about Tiger Global. And so that reminds me, maybe I should look at Tiger Global. What do they own? Their biggest position is Meta, Microsoft, Alphabet, Apollo Global. Apollo Global, PE firm. What is happening with this PE firm? Maybe I should have this in here so that I can look at the other company. What's happening with Apollo Global is APO, I guess. Viking have exited. Okay, not much. Okay. C Limited. I'm in a good company. Amazon, Nvidia, United Health. What is United doing that uh, others are a lot of folks adding to the United? Because I'm not into any of these tech. Sorry, into this healthcare company. It's the space that I don't understand. Oh no, majority of them actually reduced. So this must be an old positions that Tiger is still. So they added a little bit, but otherwise majority of them has actually reduced the position on United Health. Okay, the next one is saying is let's look at Palo Alto, PNW. Stan reduces position by 50%. No one else has reported. Zscaler, no change. Viking held it. What other stock? Tesla. Tesla. Yes, so wow, five fund managers added new in Tesla. Okay, I can ignore this 0.02%. Daniel Loeb, Viking, and Altimeter, they initiated position in Tesla. Maybe I should find a way to see how they have been moving in and out. Because Altimeter, they reduced their Tesla positions 100%. Now they bought back. DHR, that is Danaher. Sylvia, you own Danaher? I heard a lot about in terms of company is good. I've never analyzed the company. How's been your experience with Danaher? Is it a great business or Daniel is he reduced. I mean, this is like 8% of his portfolio is in Danaher. Let's look at Daniel Loeb. Daniel Loeb, third point. Wow, 13% in PG&E. What is he seeing in PG&E? Oh, come on, what is PG&E's um, ticker? PG&E Corp. PCG. What is he saying in PCG? PCG. Is there anything? Let's look at. Wow, maybe about it here. Daniel maybe knows his stuff. And the Danaher is number 3. Vistra Corp. I mean, this guy's got all the winners. Uh, Bath and Body Works, ICE, Intercontinental Exchange, then Meta Platform, Taiwan, Live Nation. Maybe I should look more into Daniel. Uh, let's see, Netflix, J&J, NFLX, Netflix. A lot of people in Q2 moved out on Netflix, and after that, Netflix hit a not moved completely out, but some of them reduced it. But still, Thomas Russo holds almost 5.5% in Netflix. J&J, J&J is a dividend paying. See which hedge funds had, oh, not big positions on the hedge fund side. Nothing much to read about. FLR, the, the, the fund managers data that I have, they don't have FLR. RH, Restoration Hardware, probably it's a very small portion. So nothing much on this one. Can you add code to 13F filings? I have to see if, so I use a few websites to go through the data. I'll take a note of it to see if those have the information about it. Any other fund managers that you want me to add? Want to check? We got 5 more minutes. Or if nothing else, you can drop off. I'll just hang. Or answer, I'll just answer some questions or anything else. No, that stock. So let me see if Data Roma has, what about Michael Burry? Oh, I've been only doing one, so why? Mr. Burry, 25% in JD, 24%, sorry, 25% Alibaba, 24% JD, 16% in shift for payments. He exited Hudson and BioAlta, whatever that is. I have no idea. Never heard. Hudson Properties, I've heard. And then Baidu 50. Oh, so Baidu 15%. So almost 65% of his portfolio is currently sitting in 3 Chinese companies. Another 15%, that makes 80%. And then other 4 companies is another 20%. Pretty concentrated. Do you see short positions? You don't have to report your short positions, right? Oh, uh, uh, on the individual stocks, I don't think you put your, but let's, it's probably not on Data Roma. So I look at Data Roma. So these are all the fund managers that I have, like super investors portfolio. So they have close to 70 or 75. Then there are 4 or 5 which are, they don't have, like Stanley Druckenmiller, they don't have it. So I have to go to Whale Wisdom and pick it from there. So let's look at Michael Burry's short position. So they don't report the short positions. Either they don't have to, or maybe he doesn't have. Oh, then crypto on Robin, you can send to an external wallet. Oh, thank you. That's a good news. Alrighty. I guess Dash. DoorDash. E-commerce, Belly, if it has to be there, then they got a Tiger Global. These two, but none of them have a huge position except Maverick Capital is 2.75%. And I don't know if this is because they were the, let's say, the initial investors, VC in this one or not. Reddit, RDDT, nah, nothing much. Then got a Cisco. Nope, nothing much, very small positions. Then you got Cloudflare. Did the stock get butchered recently, Cloudflare? This is Cloudflare, right? Net? Oh, nothing. Which stock recently got butchered? Was it not Net? Hmm. Maybe I got confused with something else. MSTR. So I don't think the hedge funds have MSTR except Bill Miller. Bill Miller is big on Bitcoin. Right? If you go and listen to Bill Miller's video on YouTube, even Bill Miller, I think it's a Bill Miller Jr. So he's pretty big on Bitcoin. But hedge funds can get access to, they can open account in Coinbase and do whatever they want to do. It's other institutional investors like endowment funds and the pension funds who probably are in maybe in MSTR. Aditya says, having a concentrated portfolio is what I struggle with the most. The more I dilute, more overall portfolio start to perform like an index. Yeah. Isn't there a stats like if you have more than 10 or 15, then basically it's behaving like an index? You have to figure out what works for you. So some says to increase your wealth, you should concentrate when you're in the initial part of your journey and then diversify to preserve the wealth. I am of a different opinion. I'm actually gone in a reverse way. So don't follow me. You follow the conventional wisdom if you want to, or chart your own path. When I start my journey, I went diversified so that because concentration means you can make a lot or you can lose a lot. When I didn't have money, I didn't want to anyway. I mean, I wanted to build wealth. I'm like, hey, let me have, and I'm new to the market. I don't understand how the companies work, how to analyze the business or earnings, how the market works. So I did not have a guts to go concentrated. I went far and wide while I'll educate myself. Over the years, now educated, now I'm trying to reduce the number of holdings that I have. So I'm going reverse. So now I'm trying to be a little more concentrated because now I'm more informed. I understand the business better. I understand the companies better. Then I can say, okay, now, once you become more knowledgeable, then I can try to hit first fences. Not when I'm just getting into the game. So I've gone through a reverse thought process. All right, guys, we are beyond 12:30. Thank you, everyone. Let's call it a day here. Again, reminder, no session next week. So do something else, go for a hike, night sunshine, have some fun. But we'll meet again week after next. Okay, that is still on agenda. All right. Hope you liked today's session. And like I said, we'll meet 2 weeks later. Until then, have fun. Hope your portfolio stays green. Even if it doesn't, it's just a matter of 2 weeks. Who cares? All right, guys. Thank you.